Hi everybody, this is Investing Club back with another video. Today is April 27th, 2020, and it is currently before the market open, and I just want to take you through an options trade that I will make today and how I plan to make money from it. Now, I would not call myself an option trader by any means. I am a long-term value investor focused on buying undervalued stocks. However, I do like making money in the stock market, so if I see an opportunity to make money using options, I will take advantage of that opportunity. I got the idea for this options trade from Adam Koo. He is very knowledgeable in how options work, and I highly recommend checking out his channel if you want to learn more about options or stocks in general. And now let's get into the options trade. So on the chart here, we have the S&P 500. What we saw was we had the big drop, we had the recovery, and over the past couple of weeks, we have sort of been going sideways in this channel. And we haven't been able to make it above the 50-day moving average yet, which I've talked about in previous videos, which is the blue line on here. And so where do I think the stock market is going in the short term? The answer to that is I don't know. It could make a move upwards and continue going higher, or it could make a move lower and then continue down. But the great thing about using options is we don't have to know what direction stocks are going in to make money. You can utilize options in such a way that you make money whether stocks go up or if stocks go down. And we're going to do that by using calendar spreads. I'm going to make two calendar spreads, one bullish one and one bearish one. So first we have to pick where my upwards price target and lower price target are. This trade is going to expire on May 15th. So that gives us around 20 days until expiration. And again, I like to use moving averages as a way to figure out where stocks are likely to start and stop. So in the next 20 days, if we see stocks move up, I would expect them to stop. They would break above this 50-day moving average, and I would expect them to stop around the 200-day moving average. Again, because that is the next level where I would expect stocks to stop at, and that is around the $300 level. If stocks go up, I'm expecting them to be around there, and if stocks go down, they would probably retest this 20-day moving average. They'd go down and either break below it and keep going down or stay there for a little while, and that is at around the $270 mark. All right, so I have my two price targets. Price could go up to 300 or it could go down to 270. And so what I'm going to do is a put calendar spread. I'm not going to get super into the details of options on this video because this is not an options channel. Again, if you want to learn more about options, I highly suggest checking out Adam Koo's channel. I'll put a link to it in the description. But essentially what I'm doing is I have the May 15th options right here, 19 days till expiration, and I'm going to choose the 267 strike price for my bearish scenario if stocks go down. Go on buy and create a calendar spread, and that's what I have here. Essentially what I'm doing, I'm buying and selling a put at the same strike price on slightly different days. And we can see that the price of this will be 31 cents. And if you don't know how options work, you multiply the price times 100. So that means the bearish part of this option trade will cost me $31. And again, then I would be doing the same thing for the $300 strike price. And now here we can get to the fun part, which is looking at the profit and loss graph and seeing exactly how these scenarios could play out. So here I have the profit and loss graph of the two calendar spreads that I just made. We were buying and selling the 300 call and buying and selling the 267 put for the SPY. The total cost from this trade is $51, $31 for the bearish part and $20 for the bullish part. Now we can take a look at the chart, and what you can see are there's sort of two peaks, and this is because there are two situations in which we make the most amount of money. First, exactly on May 15th, stocks are at $300, which is represented by here. In the other scenario, if on May 15th, stocks are exactly $267, which we see here. And so in this situation, we would make $300 profit, and here we would probably make around between $150 and $200 profit. How this chart works is on the x-axis going left and right is the price of the index. You can see at the bottom right here, as we scroll, the price of S&P 500, and the green line on this chart represents what the option will be worth on May 15th. You can see even if stocks go up, this trade will be profitable, and even if stocks go down, this trade will be profitable, which is the power of options. You can set them up in a way to make money even if stocks go up or down and you don't know. Now you may be thinking, well, what's the catch? If it was this easy, everyone would do it. And there is a catch. The catch is stock prices have to move for me to be profitable on this trade. If the stock market has been going sideways for the past 2 weeks, and if it continues going sideways and stays in the same place where it is now, then yeah, I'll lose money. Again, my max loss is $51 because that is the loss of the trade. Risking $51 to make, $200 to $300 is a pretty good risk to reward scenario. If stock prices go nowhere, I will cut my trade before that and I will actually still come out profitable. The green line is the line on May 15th. However, the purple line is the line today. And today is the 27th. And as we move the date closer to the 15th, you can see the purple line start to transform. Eventually, right on the 16th, the lines are identical. But what I want you to note is, starting on the 27th and going forwards a couple of days, you can actually see the purple line start to go up before it inverts. So we can take a date such as May 10th, and we see that even if stocks stay exactly where they are on May 10th, I will still be up around $24. And it's probably at this point, if stocks haven't moved, I'd probably cut the trade and take my gain. So really, this trade is a great opportunity to make money in pretty much any situation that the stock market goes in the next couple of weeks. Again, another risk is if stock prices jump way past 300 or drop way below 267. Again, if I see this happening, then I will likely end the trade and take my profits before they get down to the area where I am losing money. So yeah, that's basically all the details of this trade. If you don't really understand this video, that's fine, but I just wanted to open your eyes to the power of using options and how it can make you a lot of money if you understand how they work. Again, options aren't for everyone, but if you want to learn more about options, I highly recommend checking out. There's plenty of channels on YouTube that teach them very in-depth and will give you a greater understanding of how they work. And I will be making an update video for this options trade in a couple of weeks to see where we end up, and I hope to see you then.